One of the things I've been talking about in asymmetric investing for a few years now is the future of the blockchain is not necessarily cryptocurrencies themselves. It's actually how is the blockchain, the technology behind the blockchain, going to make financial transactions easier? And then what is that medium of exchange going to be? When I say medium of exchange, I mean today you go to a store and you pay dollars for a transaction or whatever currency you're using if you're in a different country. That's the medium of exchange. That may be cash, it may be a check, it may be a credit card, but the medium of exchange is typically a currency. I think the vision for cryptocurrency was that medium of exchange was going to be some sort of cryptocurrency in the future. Bitcoin, Ethereum, Solana tokens. The problem is those assets are sometimes very expensive to move around. Think about Bitcoin and Ethereum, very, very expensive to move money from point A to point B. That doesn't make any sense if you're trying to replace the traditional financial infrastructure, which is expensive, but not nearly as expensive as those blockchains. And then even something like the Solana token. I love the Solana blockchain, but the token itself, extremely volatile, and people want to invest in that asset. So why are they going to use it to buy a sandwich or a cup of coffee? So what we've seen is that the future of transactions is probably stable coins like the USDC token. And that's why some of the regulation announcements that have come out recently, or at least the discussions that are starting to happen, are potentially so bullish for Coinbase in particular. I'm going to go through some of those announcements and what we can look for, not only in the company's coming earnings report, but also from data that we can find on a day-to-day basis. I'm going to show you exactly how to figure out how much money, how much revenue they're going to be making from stable coins long-term, where that's going. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first go to this Commodity Futures and Trading Commission announcement. This is from late last week. The CFTC will hold a CEO forum for industry-leading firms to discuss the launch of CFTC's Digital Asset Markets pilot program for tokenized non-cash collateral, such as stablecoins. What in the world does that mean? So if you're going to trade on the CFTC, you need to have collateral, meaning if you lose a whole bunch of money on these leveraged positions, and futures are naturally leveraged positions, you have to have something backing them up, something that the CFTC and the person on the other side of that trade can take to cover those losses. What they're saying is one of the potential non-cash collaterals would be something like stablecoins. So it's not technically cash, but it is backed with cash, backed with dollar assets, at least the USDC token is. So this is part of acting chairman Caroline Phan's pilot program that was proposed back in 2023, and they're just simply pushing this forward. So this is potentially another huge use case for stablecoins. Now, stablecoins are a big deal because this is a big business for Coinbase. Coinbase started the USDC token, was a 50-50 owner of that consortium that ran that, and that was with Circle. Circle now runs the token, but Coinbase generates fees from Circle, and that's based on how many assets are on Coinbase's platform. I'll show you exactly the numbers from Coinbase, but one way you can look at this on a day-to-day basis is just look at the market cap of the USDC token. And I'm going to go back out to 1 year. A year ago, this token had a $27.8 billion market cap. It means there was $27.8 billion worth of assets that were doing things like buying treasuries, sitting in bank accounts, generating 4 or 5% interest at that period of time. Today, that amount of money is about $56.7 billion. So now $56.7 billion is generating 4 or 5% interest. Basically, you can just multiply those two numbers. You can multiply the assets that the USDC token has times the short-term interest rate, and that's going to be the interest that is generated, the revenue that is generated from stablecoins. Now we can look at Coinbase's revenue from stablecoins. You can see that last quarter, third quarter 2024, $246.9 million worth of revenue. That jump in the USDC token's assets under management, or assets backing the token, started in early November. That's going to start to hit their income statement in revenue in Q4 2024. Potentially will be over $250 million, so over a $1 billion per year run rate in revenue. Now this is very, very high margin. Coinbase does give some of this back to customers in the form of basically interest on holding USDC tokens on the Coinbase platform, even in a Coinbase wallet. This is revenue and profit that Coinbase just simply gets from the USDC token growing. So this is a phenomenal business for Coinbase. It's a phenomenal business for Circle. Circle isn't yet public, but if they do come public, that is going to be one of the companies that I'm going to be watching on the blockchain, because this infrastructure layer and the infrastructure like the stable coins that have become extremely popular, that's going to be potentially a really huge value point for the industry and for these companies to generate money that they really don't have to do much except for continue to grow that adoption of tokens. And now the regulatory infrastructure is potentially going to put their backing behind a stablecoin like the USDC token. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, Coinbase is going to be reporting earnings after the market closes on Thursday. And a couple of things that I'm going to watch is how is the growth of these infrastructure pieces growing? So the base blockchain, they haven't really called out what the revenue is from the base blockchain, but what's the usage look like? Are we going to be able to see what the revenue generated from the base blockchain looks like? Are we going to get kind of a path forward there? That's going to be one thing to look at. The USDC token, we are going to figure out the revenue number, but how is Coinbase starting to use that in more and more of its features? We know that Coinbase works with a lot of institutions. It's one of the preferred companies in crypto to work with kind of traditional financial institutions. So as we start to get more regulation, potential that all those companies lean on Coinbase even more. And then you have ancillary services and subscriptions that they're going to offer. So wallets as a service, you have revenue from the Coinbase wallet, all kinds of little products that they're making that are really starting to add up to be a pretty significant business. So those are the pieces of the business that I'm really looking at. The exchange, I think, is going to do extremely well in the fourth quarter. That's because there was a lot more trading in Q4. That has continued early in 2025. But the future of Coinbase is likely to be those non-trading revenue sources. So stable coins, subscriptions and services. I look at this more as an infrastructure company because this is a technology company on the blockchain. It's not just a crypto trading company. That's a little bit contrarian. That's not typically how the market sees the business. But I think long term, and if you look at the trends for the business, non-trading is going to become more and more important for Coinbase. And that's fundamentally where the disruption from this business is going to come. Stablecoins are going to play a big, big role in that. So let me know what you think of Coinbase. What are you expecting on Thursday? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.